Imagine two of the world's biggest financial powerhouses, BlackRock and Goldman Sachs, silently moving billions into cryptocurrency, while the average investor has no idea what's happening. Why are these giants suddenly embracing Bitcoin and digital assets? And what does it mean for the future of crypto and traditional finance? Stick around, because today, we're uncovering BlackRock and Goldman Sachs' secret crypto strategy, and trust me, it's going to change everything. For years, major financial institutions avoided cryptocurrency, often viewing it as too volatile, too speculative, or even outright dangerous. But in recent months, that narrative has shifted. Why? Because Bitcoin and other digital assets are no longer just seen as fringe investments. They're being recognized as viable hedges against inflation, tools for portfolio diversification, and, most importantly, assets that their clients are demanding. With inflation at record highs and distrust in traditional fiat currencies growing, people are looking for alternatives. For BlackRock, Goldman Sachs, and other financial giants, crypto is no longer something to ignore. It's an opportunity they can't afford to miss. Let's start with BlackRock, the world's largest asset manager, managing a jaw-dropping $10 trillion in assets. Just last year, BlackRock CEO Larry Fink made headlines by hinting at the company's growing interest in crypto. And now, it seems that interest has turned into action. In early 2023, BlackRock applied for a Bitcoin ETF, a massive step that could make Bitcoin more accessible to institutional investors and everyday people. If approved, this ETF would allow clients to invest in Bitcoin without actually owning it, reducing the risk but giving exposure to Bitcoin's price movements. And BlackRock isn't stopping there. BlackRock has also invested heavily in companies tied to blockchain infrastructure, cryptocurrency mining, and digital wallets. Their goal? To build a robust support system for the crypto ecosystem, paving the way for smoother transactions, better storage solutions, and enhanced security features. What's the strategy behind this? Simple. BlackRock sees cryptocurrency not just as a speculative asset, but as a cornerstone of future financial systems. By investing in the infrastructure, they're setting themselves up to profit whether Bitcoin soars or sinks. They're not just betting on crypto. They're building the ground it stands on. Now, let's talk about Goldman Sachs. Unlike BlackRock, Goldman has been a bit quieter with its crypto ambitions, but don't let that fool you. Goldman Sachs has been steadily preparing for a world where digital assets are mainstream. In 2021, Goldman quietly launched a crypto trading desk, allowing clients to buy and sell Bitcoin and other cryptocurrencies. This wasn't just a publicity stunt, it was a serious move into the digital asset space. Goldman's trading desk is part of their long-term strategy to meet client demand for digital assets and, crucially, to profit from the growing crypto market. But Goldman's ambitions go beyond trading. They've also invested in crypto custody solutions, safe, secure storage options for digital assets. And why is this important? Well, institutional investors have billions to invest, but they're cautious about security. Goldman's custody solutions bridge that gap, making it easier and safer for large investors to enter the crypto market. With their strong reputation in the financial world, Goldman Sachs is positioning itself as a trusted bridge between traditional finance and digital assets. They're not just dabbling in crypto. They're laying the groundwork for a massive shift in how institutional investors approach these assets. So, why does this matter to you, the individual investor? Here's the thing. When institutions like BlackRock and Goldman Sachs enter the crypto space, they bring legitimacy, liquidity, and, ultimately, price stability. Their presence attracts other big players, which means more money flowing into Bitcoin, Ethereum, and other digital assets. Institutional investment could lead to a massive price increase for Bitcoin. As demand grows and supply remains fixed, the price of Bitcoin could skyrocket, potentially reaching heights that many individual investors never dreamed of. More importantly, the entrance of institutions can pave the way for wider adoption and acceptance of digital assets in everyday transactions. Think about it. If your bank, your pension fund, and even your favorite investment firm are backing Bitcoin, it's only a matter of time before crypto becomes an everyday part of our financial lives. So, why now? Why are BlackRock and Goldman Sachs entering the crypto market at this moment? The answer lies in the timing. Both companies see 2025 as a potential turning point for crypto, driven by factors like the Bitcoin halving, increasing regulatory clarity, and the potential for a global economic shift toward digital assets. BlackRock and Goldman Sachs are preparing for the post-halving Bitcoin bull cycle, expected to start in 2024 and peak around 2025. Historically, each halving has led to a massive increase in Bitcoin's price, and these financial giants want to be in a position to capitalize on this trend. Additionally, with inflation rising and economic instability becoming the norm, more people are turning to Bitcoin as a hedge against traditional currencies. BlackRock and Goldman understand this shift and want to be the financial giants leading the charge into the digital age. What does this mean for individual investors like you? It means we're at the start of a new era in crypto. With BlackRock and Goldman Sachs in the mix, we could see an influx of institutional money that transforms the market, bringing more stability, higher prices, and increased credibility. But here's the kicker. While institutional involvement brings many benefits, it also changes the game. As these giants enter the space, they'll bring regulations, changes in how crypto is traded, and new market dynamics. For those who get in early, this could mean massive returns. But for those who wait, it might mean missing out on one of the biggest opportunities of our time. In the end, the actions of BlackRock and Goldman Sachs are a clear signal that crypto is here to stay. These financial titans are positioning themselves for the future, and they see crypto as an essential part of it. Whether you're an experienced investor or just starting your crypto journey, there's never been a more exciting, or crucial, time to pay attention to what's happening in the market. So, are you ready for what's next? Hit that like button, subscribe, and turn on notifications to stay ahead of the game. Comment below. What do you think of BlackRock and Goldman Sachs' moves in the crypto space? Are you as excited as we are? Let's get the conversation going.